What's going on, team? It's Caddy with Money Investing. I hope that you all are having an amazing day. So in this video, we will be talking about the S&P 500 index and the S&P 500 ETF, ticker symbol SPX and ticker symbol SPY. If you guys enjoyed this video, please make sure to give this video a thumbs up because it really helps out with the channel and recommends this video to other people who might be interested in watching. Also, subscribe and hit that notification bell so you don't miss out on any future market updates, videos related to investing and technical breakdowns. So we'll also cover the VIX index, which I have been following more recently with my market updates. And if you have been watching any of my previous market updates, you have an understanding on what we are looking at in terms of the VIX indicator, which is also the volatility on the S&P 500, and where do I personally see it going in the near future. I'll also give you guys an update on the jobs report in terms of the job openings, and there was an interesting piece of data that also came out which went over how many people are unemployed per one job opening. So to first go over the markets itself, the markets were down today. The S&P 500 down about 1%. You guys can see that NASDAQ was down close to about 86 basis points and the Dow Jones was close to 1.5%. In my previous video, I've essentially mentioned that between the three market indices, NASDAQ being a little bit stronger than the other two because it's very tech heavy, Dow Jones being one of the weakest ones among the three, which is why it's down more than the S&P 500 and the NASDAQ. And the S&P 500 is kind of in the middle of the three indices, which is why it's down about 1%. So now if you jump over to the patterns and to first go over the jobs report, we reported close to 5.3 million job openings from the forecasted 5 million in the month of May. So that is a lagging indicator which has a 1 month delay. But that being said, this chart right here, you guys can see that currently we have about close to 3.8924 people unemployed per one job opening. So that essentially means that for every one job opening, we have anywhere between 3 and 4 people that are unemployed. And you guys can go back as far as 2010 and see when that number was close to 6.5 to 7 people per one job opening. So that essentially goes over the Great Recession and the housing bubble, and during that time the number was much higher. But again, we don't have a clear understanding as to how accurate this number is, whether it's 3.5 to 4 people or whether it's higher, because the unemployment rate also has some misclassification error, and right now it sits at 11.1%, but the real number or the accurate figure for the unemployment rate is still kind of unknown. But that being said, we will now jump into the patterns. I will first go over the S&P 500 ETF, and if you guys did get a chance to watch my morning update, we identified some of those key support and resistance levels for this ETF, right? So we understood that $318 was going to be the next resistance based on previous patterns because that is where it found its support. And yesterday it essentially got rejected at $317 and I think 52 cents if I'm not mistaken. So this right here was going to be the high for yesterday. So $317.68 was the high for yesterday, and then after hours it kind of curled back up, hitting a high of $317.91, but it still got rejected at the $318 level, which is what this kind of resistance line essentially represents based on previous patterns. So now today we did go over, touched that level again. So right now we're looking at the 1 hour chart, and you guys can see from my morning update, we were kind of like looking at this pattern and how it was kind of gapping down, curled back up, broke out of its $315 more near-term resistance because that was also a resistance from back on July 2nd. It broke out of that level, and then this right here was the inverted hammer candle that the pattern formed at right at 11 o'clock, right? So this right here is what we're looking at. And as soon as this inverted hammer candle was formed on the 1 hour chart, is usually a sign of a reversal pattern or a change in direction. And that was also the resistance that we hit. And then it kind of sold off throughout the rest of the day, and then pulling back down to levels of $313. So it broke below its $315 level, which was gonna be its next support, but essentially broke below that level, right? So the reason why we recognized this $315 support in the first place is because if you pull back on the chart, this has previously acted as a really good resistance, right? So moving back as far as June 19th to June 23rd, that has previously acted as a resistance, which in my opinion could have been and was a new support. So you guys can see pre-market, it actually bounced off of that level, right? So $315 was acting as a good support until the last 2 hours into the market. It essentially broke below that level, pushed up, retested that support now gonna act as a new resistance. So now moving forward, where do I see the markets going? It'll be really interesting to see where the markets open tomorrow. Right now you guys can see that the futures market is open. It's up just about 10 basis points, and after hours the S&P 500 is also up about 10 basis points, close to about 9 basis points. So if this $314 level holds as a really good resistance moving forward, which it has done previously in the past, and it acted as a support pre-market, but now moving forward, if it starts acting as a new resistance, then our downside risk is close to about 1%, which is what this drop is going to be, down to the $310 level. And if that happens, I'm potentially going to see the bounce out of $310, because that is a very key support that can potentially hold its level, right? So based on previous patterns, that is also a level that has previously acted as a resistance. And then moving back even further, you guys can see that that was kind of like the level where we kind of consolidated, found support, and then pushed up to 315. So moving forward, that is the next key support level that I will personally be watching. But if the pattern does break below the $310 level, because again, anything can happen in the markets based on fundamentals, catalysts, news, technicals, there's so many different factors that affect the markets. So if it does break below the $310 level, I don't have a specific support, but rather a range that we need to kind of watch. It's going to be somewhere between 308 and 306. Those are the two price targets that I want you guys to watch if it does break below $310 level. And the reason I say that is because the $308 level has previously acted as a resistance right about here, and then the $306 level has acted as a really good support right about here. So this was on July 1st, so the first week of July, and then moving back the last week of June. So those levels have essentially acted as previous resistance and support levels. So now moving forward, I personally do see a minor pullback. Well, today was a pullback of close to 1%, but I still see the markets dropping just a little bit more, because we are also going to look into the VIX indicator, which we have looked into in the past. So now going over to the VIX index and then going over to the daily chart, you guys know that we did analyze this previously in one of my market updates, and one of the things I mentioned was the volatility play off of the 200-day moving average. And the reason is very simple, because it has previously acted as a really good support. Now today the VIX index was up close to 5.33%, you guys can see this, and then yesterday it was up close to about 1%, which is what we analyzed in my last night's market update. So moving forward, it's kind of looking like a spike in volatility is potentially going to come soon. But again, it doesn't have to happen. We may not see a volatility spike. It can most certainly die down even further and break below the 200 moving average, which is going to be the blue line, resulting in the markets even going higher. That being said, I personally see the volatility spiking close to at least 35, which is going to be a jump of close to 19 to 20%. If that doesn't happen, great, the markets are going to continue their rally, but if it does happen, we need to make sure that we are prepared, and that's something that we can expect in the markets, which is going to result in the S&P 500 and all the other market indices dropping and selling off moving forward. So looking at this VIX index, we understand that back in March, it essentially bounced close to about 300%, which is what led to markets bottoming out in the second week of March. But then moving forward, you guys can see the volatility essentially died down, and then it bounced off of its 200-day moving average, which is the blue line, on June 11th. And June 11th, the S&P actually was down close to 6%. So you can see how there's an inverse correlation between the VIX indicator and the S&P 500 index, but it's not a perfect inverse correlation. So for example, if you are trading two leveraged ETFs, one on the bullish side, the other one on the bearish side, they're going to be perfectly inversely correlated, right? So if one of them goes up 3%, the other one is actually going to go down 3%. But it's not the same with the VIX index and the S&P 500. They are correlated, but they're not perfectly inversely correlated, if that makes sense. So the marginal change is going to be different. So that being said, I personally do see a bounce off of the 200-day moving average for the volatility index, which is going to be the VIX. So now we're going to jump over to the SPX, which is going to be the S&P 500 index itself, for us to identify where those next key support and resistance levels are going to be. So in my previous market update, I essentially mentioned this right here, the 3180 level, as being the next resistance, similar to the S&P 500 ETF being the $318 level for that ETF, because that has previously acted as a support, which is now acting as a resistance. So now moving forward, the 3130 level for the S&P 500 index is something that we need to watch very closely, because that has previously acted as a resistance. And if we go over to the 1 hour chart, you guys will notice that that has also been kind of like the level where we have previously found both support and resistance in the past. So now moving forward, if he does break below the 3130 level, which is going to be very similar to the ETF, so the next level we need to watch very closely is going to be 3080, because that has previously acted as a support that can potentially continue to act as support if we do break below the 3130 level. That's going to be a drop of close to about 1.3 to 1.4%. And this level has also acted as previous resistance, as you guys can see back on June 15th. So moving forward, those are some key levels that we need to watch. If we see a volatility spike in the VIX index, that can result in the markets dropping even further. Again, based on my analysis and my opinion, I do see a minor pullback in the S&P 500 index and a volatility spike in the VIX in the near term. Again, it may not happen, I could be wrong, and this is not financial or investment advice in any way. This is just my analysis and my opinion of the markets. Please make sure to do your own research and your own analysis and your own due diligence before investing in the stock market. As always, if you guys did enjoy this video, please make sure to give it a thumbs up. It really helps out with the channel and recommends this video to other people who might be interested in watching as well. To give you guys a quick recap, we went over both the S&P 500 index and the S&P 500 ETF. Looking at both, the SPX closed at around 3145. The next support I'm watching is 3130, which is 15 points away from its close from today. If we do break down the 3130, the next support I'm watching is 3080. For the S&P 500 ETF, we are still trading and we are struggling to break out of its $315 resistance. If we do get rejected here, the next support we are watching is going to be $310. And then if we do break out of that level, then we have a range between $308 and $306 level. As always, if you guys enjoyed this video, make sure to drop a like, subscribe, and hit that notification bell so you don't miss out on any future market updates, videos related to investing, and technical breakdowns. As always, happy investing, and I will see you guys in the next video.